I think most people want to compartmentalize gold into a conversation about flight to safety and moves inverse to the dollar. And if gold is up, that means stocks are down. That's not true. That's simply not true, because the dollar and gold can and have moved together. The equity markets can rally with gold. In fact, take a look at this view right here. Gold is generally moving up, and up until recently, so have equities. So the argument that gold and equities have an inverse or negative correlation is just flat out wrong. So, all right, well then what is moving gold, Rag? So gold behaves more like a currency, and gold is very sensitive to a very specific relationship. And if you can understand this relationship, you can get a better grip on gold. So let me show it to you right now. This is what moves gold. Now, you can find this on the internet for free. And this is understanding what's known as real yields. Okay. What is driving gold? As real yields fall, gold will rally. It's been this way since I've been trading in gold. So as far as what the real yield is, you see that I've described it here. The real yield is the nominal yield of a bond minus the rate of inflation, yada, yada, yada. But just so you know what it is, right? You don't have to calculate this. You can go to a number of sites. The Federal Reserve tracks real yield, or sites like this track real yield. But I like this because the Federal Reserve will give you the price, and you can see the price rising or falling day to day. But I like this view because it shows you directionally what the yield is doing, which is really great. So here's like the 30-year yield. Here's the 20, right? So real yield is what we're talking about, real yield. And so as real yields fall, and you can just Google this, as real yields fall, okay, you will see that gold rallies. In fact, you can see that how this has been sloping downward, gold will rally. And that's really what it's all about. So again, just go to Google and do a search for real yield. And you'll see like Bloomberg has one, the Treasury.gov has one. You know, just pull whichever one visually resonates with you, and keep an eye on real yield. And if it changes the direction and starts to move higher, oh, that's actually a website. Okay, well, you can go straight to the Treasury.gov and then look at real yield. Okay, so there's a little homework for y'all. Take a look at what it's doing, and as it falls, you're going to see that gold will start to rally. And that's what moves gold. And I think that's why sometimes folks are perplexed by why is gold moving, and yet the steady is as real yield falls, gold will rally, and that's exactly what we're seeing. So keep an eye on that. The Federal Reserve can manipulate that. Of course, they can try to influence inflation, and they are in charge of yields for the most part, right? Of course, with all the asset purchases and whatnot. But here, let me put this back up here. That wasn't it. There we go. So it's a nominal yield of a bond minus the rate of inflation. Okay? That's why gold's moving higher. Keep an eye on real yield. You'll know if gold's going to hit higher highs. Does anyone here, with the trajectory of bonds and the trajectory of inflation and what the central banks have been doing, does anyone here think that real yields will be increasing anytime soon? Real yields increasing? Probably not. So that is going to keep gold on track. I hope that helps. I know a little bit complicated, but go take a look at the real yields and go take a look at gold, and it becomes crystal clear. Okay?
Hey everybody, this is John, and you're probably wondering, or you've probably heard, that we've got a new Squeeze Pro class coming up. Now, if you're familiar with the old Squeeze, that's been something that I've been using for, gosh, over a decade now. And so the question that comes up is, why would we need a new Squeeze? Okay, is the old one not any good anymore? Well, the thing about it is that the new Squeeze Pro has different settings in there that gives you more swings at the plate. So not only is the old Squeeze incorporated in there, but there are settings that have been established where we've back tested through years and years of data. And what I found is had I had the Squeeze Pro before, I would have had twice as many at-bats as on Amazon. I would have had twice as many at-bats on Tesla. And in fact, as I went through Amazon and did the back testing, because I did not have the Squeeze Pro on there, I missed 77 squeezes over the course of 10 years on the daily chart on Amazon, which would have resulted, if I was trading 10 lots at a time, an additional $2.2 million in profits. That really caught my attention. So now, by utilizing the Squeeze Pro on multiple time frames, not only do I get more at-bats, but there's also tools embedded into it that allow you to see the average length of the squeeze once it fires. I have found that this has been a tool that's improved my trading game exponentially, and I'm excited to share this tool with you. My Squeeze Pro class is coming up on March 7th, so register now to reserve your spot.